So let's talk about how to post journal entries to the ledger. So we have this list of journal entries here. We have 4 journal entries. We need to post all of these into our ledger. So a ledger is going to show each individual account anytime that you debit or credit that account, and then it keeps a running balance. Right, so this is just our way to know, okay, how much in cash do we have? How much in accounts receivable do we have? Well, we can take a look in the ledger and see those balances. So to post, that's just transferring the information. So we take a look at our first entry on January 1st. We debited cash 10,000. So we go to our cash in our ledger and we put the date, we put the explanation. So this was an owner investment. We debited 10,000, which means that its balance is now 10,000. Now you'll notice this reference column, this ref column, right? So in the ledger itself, we put the journal page. So this was on the first page of our journal, let's say, so our reference would be J1. But then we also want to show in the journal itself that we posted it to the ledger. So we put the account number. So we get this 101 because cash, its account number, we were told was 101. Now we can look at owner's capital. Owner's capital on January 1st, owner investment, we credited 10,000, so its balance is now 10,000. And then we put the references in, right? So J1 in the ledger and the account number 301 over in the journal. So we've now posted that first journal entry. Now here on January 6th, we debited accounts receivable for 8,000. So we go to our accounts receivable in our ledger and we put January 6th, we performed services and we debited our accounts receivable 8,000. So we put 8,000 in the debit column and update its balance. Its balance is now 8,000. But we're not done yet, right? We need to put the reference in as J1 in the ledger, and then in our journal itself, we put the account number for accounts receivable, and that's our 105 because we were told that accounts receivable was number 105. Now, we also credited service revenue. So we go over to our service revenue. On January 6th, we perform services. We credit 8,000, so its balance is now 8,000. And we put in the references. So J1 and 401. Now here on January 10th, we have a debit to equipment, right? So we go down to our equipment. And on January 10th, we purchased equipment, we debited 30,000, so its balance is now 30,000. We also want to put in the references, right? So we put J1 in the ledger and 112, because equipment is account number 112, we put that in our journal. Now we also credited cash. So we go back to our cash part in the ledger and we show January 10th, we purchased equipment, so we credited cash for 6,000. Now, for our balance, we want to keep a running balance, right? So we had $10,000 in cash. We just spent 6,000, so we have 4,000 remaining. And then we want to put in our references, right? J1 and account number 101. Now we also credited accounts payable. So on January 10th, we purchased equipment, credit 24,000, which means that the balance in accounts payable is 24,000. And then for the references, again, J1 and account number 201. Now our final entry here on January 27th, we received a utility bill and we debited our utility expense for 300. So we go over to our utility expense, say on January 27th, we got the January utility bill, a debit of $300, so the balance in that expense account is now $300. And then we want to put in our references. So J1 in our ledger and 520, because utility expense is account number 520, we put that in our journal. Now, we also credited accounts payable. So we go back to accounts payable and we say on January 27th, the January utility bill, we credited $300. Now accounts payable is a liability, so it increases with this credit. So its balance is now $24,300. And then we put in our references, J1 for journal page 1 and 201 for account number 201. So a ledger helps us take a quick look at our accounts and see their balances, right? Because you're going to have multiple transactions for these different accounts. So we can just take a quick look and say, okay, we have $4,000 in cash, $8,000 in accounts receivable. So we just look at our ledger to figure out these account balances.